The US dollar collapse is imminent. Die Welt. Donald Trump's administration is a thing of the past, at least in the United States President's office. His successor Joe Biden is personally and politically not the opposite. Many place their hopes on him in the area of economic policy, which will give the United States new strength. But in one area, almost all economists now expect the opposite. It's about the US dollar. They predict a downward trend primarily due to Biden's economic and political plans. Economist Stephen Roach even predicts that the dollar will collapse. Joerg Kraemer, an economist at Laser Asset Management consulting firm, shares a similar view. The American crisis, the rise of the United States, and the sensational weakening of the United States dollar in recent months, Kraemer says. This could lead to a real currency crisis in the worst-case scenario. But even if it does not get to this point, a significantly weakened dollar will have significant consequences for Europe, depositors, and investors in the country. Joe Biden, as the new United States President, plans to implement the so-called America's Liberation Plan as one of the first measures. Those approved for lump sum payments of $600 to Americans in December will add an additional $1,400. Unemployment benefits will increase by $400, not $300 as previously planned. In addition, hundreds of billions of dollars have been allocated to support states, communities, and schools, as well as investments in infrastructure, research, and clean energy. The total volume of the package is $1.9 trillion, which is about 9% of the productivity of the United States economy. At the same time, the aid package for December amounted to $3.4 trillion. As a result, economists are raising their United States growth forecast one by one. Trillions, of course, will boost the economy. But at the same time, debts will go uphill. And without additional spending on America's rescue plan, the United States debt this year will probably be about 134% of GDP, the figure Italy had before the crisis. But it will be even higher. Last year, the budget deficit has already reached an incredible 15% of GDP. It was assumed to fall below 10% this year. But now, Joerg Kraemer, an economist at Commerzbank, assumes it will remain at the same level this year if the plans are implemented. Then, the total debt will be about 140% of GDP. This will have consequences. Roach fears that the high budget deficit will further widen the US trade deficit, and coupled with the Federal Reserve's policy of keeping the printing open and closed, will cause the dollar to fall. During this year, I see the potential for 15 to 20% further declines in the broad dollar index, Roach said. It measures the dollar against a basket currency from leading US trading partners. Since the beginning of the coronavirus crisis, the dollar has grown sharply. Later, investors rushed into this currency, which was considered a haven as before. Zach Pundell of Goldman Sachs later says the dollar was overvalued by 20%. Since then, the American currency has dropped significantly again, but is still overvalued by 8 to 10%. According to the expert, movements can therefore be much stronger. True, this does not mean a collapse, and Berenberg Bank's chief economist, Holger Schmeiding, agrees with this view. For now, he said, the American money is even possible to grow somewhat, so the market program is very favorable for the dollar, he said. Because when the American economy improves, inflation expectations will rise, and this will lead to an increase in interest rates. Therefore, more capital will come to the country, and this will support the dollar. Of course, it grew slightly when it became apparent that American Democrats would have a majority in both houses. and it would be easier for Joe Biden to carry out his initiatives. However, this environment is developing around the world, said Schmeiding, and this will lead to the fact that, according to him, the money will go from safe havens and above all from the United States. Therefore, in the medium term, the expert expects the dollar to weaken significantly and forecast the interest rate will be $1.28 per euro for the coming months. Most economists agree. On the one hand, this will have implications for the European economy. Exports to the United States will become more expensive. However, both savers and investors must keep up with some changes. As a matter of fact, a weak dollar in the capital market will also cause changes. Olivia de Berenga, head of research at LFDE, believes circular stocks will benefit most from this. He mentions companies that were particularly hard hit by the impact but tend to perform particularly well at the start of a business cycle. The same is true for value stocks, which are securities of companies with stable business, without large jumps in trading volumes, such as in technology stocks. However, on the other hand, these shares are very reliable as an investment tool. De Berenga said the stocks of developing countries, where growth in the United States market is second, can play a positive role in the increasing deficit in the United States and the depreciation of the dollar. Precious metals can also benefit from traditional protection functions against inflation and increased demand due to economic growth. This is particularly true for platinum and palladium, which are assigned a central role in the context of green technologies development in the Joe Biden program, the expert added. Those who want to take advantage of the weakening dollar can bet on this trend. Alternatively, investors can of course directly purchase the currency, but this will be a rather complicated mechanism. After all, with a falling dollar exchange rate, you can simply buy dollars. Then with an increasing exchange rate, such a direct investment instrument will not work. Therefore, a workaround will be needed in the form of purchasing certificates or options. For example, knockout certificates. They increase the amplitude of the movement in the foreign exchange market several times. The closer the current rate gets to the barrier built up in the certificate. In case of serious deviations from this obstacle in any direction, the relevant paper will lose value. However, investors can also choose products that are far from the knockout threshold. Potential profits will be less, but the risk of loss will not be too great. Currently, this applies, for example, to the DZ Bank's certificate under the securities number DF585Z. It now increases its movement amplitude fivefold and loses value when the euro hits $0.99. There are hundreds of such securities with a knockout threshold between $0.5 per euro and 1/10 of the current rate. Betting on Joe Biden and the dollar, however, as in politics, it must be understood here, often success and failure are literally one step away. If you make any investment or legal decision, it is advised to consult an expert before making this decision.